My name is Jake, welcome to the channel. In today's video, I want to talk about what every dividend investor needs to understand. And there's a couple of things that I want to share with you, and all of these are things that I've learned along the way as I've achieved financial independence and retired early. If you're new to the channel, I reached what is called barista fire at the age of 37. It was a little bit of an unconventional way. I was planning on working a few more years, but unfortunately I was laid off during the tech layoffs in 2023. And instead of going and getting another full-time job, I decided, you know what? My dividend portfolio pays enough where I can live off the income from my portfolio and work a little bit on the side here on YouTube. And so that is what is called barista fire, where I'm not actually a barista at Starbucks or anything like that, but I'm working part-time to supplement the gap from our expenses and the dividend income that our portfolio generates. Now, I've been investing for about 20 years, and if you follow the channel, you know that I've made a lot of mistakes. I used to invest into penny stocks. I made basically every mistake that you could make, I made. You know, the last about 7 or 8 years is where I've been really focusing on dividend investing and achieving financial independence with dividend investing. Now, there's many different ways that you can achieve financial independence. You can do it through real estate. You can be a landlord, right? You could have rental properties. You could do it through the 4% rule. You could do it many different ways. I chose dividend investing because it was the way that really resonated with me. It was, you know, I didn't want to worry about selling my shares in retirement. I didn't want to have that boom or bust type of lifestyle where if the market's up, okay, we eat meat. If the market's down, we only get rice and beans, right? That boom or bust. I never wanted that in retirement. And so I focused on dividend investing. And a lot of you out there, if you're a dividend investor or if dividend investing appeals to you, you don't want to see the volatility in the market. You don't want to see your portfolio drop 30% in a bear market. And I completely can resonate with that because I'm the same way. And so that's really what appealed to me when I first started learning about dividend investing, was the idea of not having to sell my shares in early retirement. Now, I wish that YouTube was around when I first started investing. I probably would have made a lot less mistakes. I would have touched a lot less hot stoves, right? I had to learn, you know, the hard way in life by touching the hot stove. But it's really important that you understand the basics when it comes to investing in the stock market. A lot of times we dive into things head first, not really understanding what we're doing. And sometimes it works and sometimes it doesn't. And when it doesn't work, it could look a little like this. Oh man, I love it. I love it. All right, cool. So let's take a look at this. Let's take a look at what every dividend investor needs to understand. So I've had the great opportunity to connect with dozens of you outside of YouTube, you know, here on Google Meet. I do it a couple of times a week where, you know, people can book time with me, talk about their portfolio, what's working, what's not working. And I've seen some trends over the years, but the overwhelming majority of the conversations that I have, you know, when speaking with people and hearing their frustrations and their challenges and their struggles, there's a few things that usually pop up over and over again. And I want to cover a couple of those things in today's video. Now, this is not going to be entirely unique to dividend investors, but the overwhelming majority, if you're watching my channel, you're probably investing in some form of a dividend strategy. And so most of this is going to apply to everyone who's invested in the stock market. And the very first struggle that a lot of people have, and what most people have to understand, is understanding what phase of life you're in. Okay, so I'm talking to a broad audience. I'm talking to people in their teens, their 20s, 30s, 50s, 60s. I've even spoken to people in their 80s, right? I got people following the channel who are in their 80s. Okay, and so everyone is in a different situation. And the very first thing when someone is talking to me and saying that they're struggling with, you know, how to set up their portfolio or trying to figure this all out, the very first thing that I make sure that someone understands is what phase of life they're in. And the question that I usually ask will be, well, are you in wealth accumulation phase of life, or are you in wealth preservation phase of life? Now, if you don't understand what that means, you need to understand this. If you're in your 20s, and let's say you plan to work for another 20 or 30 years, well, you're in wealth accumulation phase of life. You have years, decades before you plan on retiring. So you need to be a little bit more, you need to stomach a little bit more volatility and accept that volatility in fluctuations in the market is actually your friend. You want to see the market fluctuate up and down as you're buying into the market. Okay. Now, on the reverse side, if you're 60 years old, or you're just planning on retiring here in the near future, age is just a number. Okay. If you are nearing retirement, whether early retirement or the traditional age, you are likely in what's called wealth preservation phase of your life, where you don't want to go and invest everything in, the most riskiest assets like, pure growth stocks, pure, tech stocks, Bitcoin, speculative investments that have the possibility and potential. It's all about the potential to 10x or the potential to tank, right? To go down. And so it's incredibly important that you understand this. And this all comes back to what I always talk about on my channel is how to invest based off of your investment time horizon. Now, if you're a longtime follower of the channel, you've heard me talk about this a million times. And the reason why I talk about it so much was this was a major light bulb moment for me when I was trying to figure this out and trying to understand how to retire off of my dividend portfolio, understanding how to invest based off of my investment time horizon. I made a handful of videos on my channel on this topic, but the reason why this is the first topic that I'm talking about in today's video, I spoke with a couple here this week. I'm not going to name their name. They were great. They follow the channel and they're in their early 30s and they're investing overwhelmingly in treasuries, bonds, and I bonds. Very, very low risk, low volatility investments. And then I started to ask them the question, well, are you trying to grow your wealth or preserve your wealth? And so it is incredibly important that you understand what phase of life you're in. And that's the first thing. Understand, are you in wealth accumulation phase or are you in wealth preservation phase of your life? Because by understanding which phase you're in, it will help guide you to help you understand where you should be investing your money. Okay. And if you're in wealth, just to kind of, throw that out there, if you're in wealth accumulation phase of your life, you want to start focusing on assets that are going to grow your wealth. Yes, you're going to have to stomach the volatility along the way, but you have to understand which phase of life you're in. Not only understand it, but even more importantly, take action on it. The next thing that every single dividend investor needs to understand is that the stock market is the greatest wealth building vehicle in mankind. Now, there have been some out there who have gotten rich with gold, with Bitcoin, with farmland, with everything that you could imagine, right? Flipping cars, flipping houses, real estate. It's important to understand that there's different asset classes that you can invest in, right? You could invest into bonds, you could invest into the stock market, into real estate, commodities. Every single asset class has an expected rate of return and what is expected, how it is expected to grow over time. Now, obviously, past performance is never a guarantee of future performance, but there's a big but. Each of these asset classes come with a different degree, a different level of risk. And investors stomach risk because they assume that over time they're going to get a higher rate of return. Low risk, okay, well, you're going to have lower possibility for future growth. High risk, well, you might have to stomach a lot of downturns, but over time, your potential, keyword potential, is much greater to grow your wealth. So understanding what phase of life you're in, if you're in wealth accumulation phase or wealth preservation, it will help you to understand where you should be investing your money. If you have a long-term time horizon, you don't want to sit in cash. You don't want to sit in bonds. You want to invest in the greatest wealth building vehicle that the the world has ever seen, and that is the stock market. The stock market is one of the greatest ways your average person can grow and build their wealth. And what I always recommend is to not just focus on picking individual stocks, but really if you focus on the S&P 500 as an example, or an index fund, that is the way that your average person can grow their wealth. But you're going to be able to grow your wealth by investing it into the market versus other areas like with bonds, with gold, other asset classes. And so it's incredibly important to understand that yes, there will be volatility. And it's so important that you understand this. If you're new to investing, if you're scared, the market's at all-time highs, zoom out and understand that yes, it is inevitable that the market will continue to have corrections. It is inevitable. It is also inevitable that there will be market crashes. There will be recessions, okay? But the market will continue to chug along as the world becomes more productive, as the government prints more money, right? It's the way that the system works, right? Unless you're like a doomsday person that's got their tinfoil cap on or thinking that we're the next Roman Empire in the next years and that's all going to come crumbling down. If that's the case, then what are you even doing, right? Why are you listening to me? Go dig your ditch and dig your bunker and start prepping, right? Like, to each their own. But what I'm saying is, if you're an average person and you believe that the world is going to continue chugging along, not only today, but 10 years, 20 years, 50 years, 100 years into the future, the best way that you can grow your wealth is investing it into the stock market. And the last thing that I want to cover in this video that every dividend investor needs to understand. When I talk to people and they're scared about the market, they're scared that the market's at all-time highs. Oh, there's a looming recession around the corner. Oh, what if this happens? What if this happens? There's always going to be recessions. There's always going to be corrections. We understand that. And with that understanding, it is also important to understand what you're actually doing when you're investing into the stock market. When you're investing into SHD and DJRO, as an example, these dividend growth ETFs that hold hundreds of companies, right? DJRO has over 400 companies, SHD right around 100 companies, okay? When you're investing into these ETFs, you're investing into real businesses. You have to understand that when you invest into SHD, when you invest into DJRO or the S&P 500, you are investing into real businesses. And here's the most beautiful thing about it. When you invest into these ETFs, you own a small fraction of America. You own a fraction of every business in that index. And the most amazing thing ever, when you're investing into the stock market, into these ETFs as an example, and when you're going to work, you're sitting in traffic and you're looking at all the people going to work, going and being those busy little bees, you have to remember that all of those people going to work, they're working for you. Because you own a part of America. You own shares in Home Depot. You own shares in Costco. You own shares in Apple. Every single time someone is going to work, they're working for you because you are a fractional owner of those businesses. And that is what every dividend investor needs to understand. When you invest into the market, into these dividend growth ETFs or the S&P 500, when you invest in the market, everyone that is going to work, they're working for you. So the next time you're sitting in traffic or you're in a crowded room, everybody's going around, they're holiday shopping, everything's chaotic and crazy, and you're having a bad day. You're down on your luck, but you're still invested in the market and you see all the commotion. I want you to take a second and pause and think for a second, all these people, they're all working for me because I'm a fractional owner in all of these businesses. And what it comes down to is a reset of your understanding and expectations of what you're actually doing. So never lose sight of what you're actually doing when you're investing in the stock market. You're a fractional owner of real businesses in a real functioning economy. And I hope that that puts a smile on your face because it does for me every single day. And I hope that it does for you as well. Thank you so much for watching. I hope that you learned something new, and I'll see everybody in next week's video.
Please subscribe.
Subscribe.
Please Sakar para, eh?
You know what? I think we're gonna be friends. Can everyone say hi to my friend? That's crazy. I just wanted to say thanks. I'm glad you came along, partner.